This is our Suburb Trends Report for June 2024, and we'll be looking at what property investors need to know when they're looking at investing across the country. In this episode, we'll be discussing whether investors should place more reliance on data than they do on local knowledge, or vice versa. And if a marriage of the two is ideal scenario, where does one type of research stop and the other take over? Are all of our cautions and warnings about engaging data-based buyer's agents simply our own confirmation bias at work, or can data prove that our concerns are well-founded?
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
This month, we've asked Ken to look into a bit of a dilemma that a lot of property investors face, and that is, should I rely on data and base all my decisions on the numbers? And if so, what numbers, for God's sake? Or should I be looking at local specialisation and what really is the most valuable? So can you kick us off, Kent, by briefly explaining how you've tackled this challenge?
So I came up with a list of things that data couldn't necessarily give me. I tried to challenge myself, and I came up with 10 things that either data is limited or there's a gap in terms of timing that you can only really get with an on-the-ground local, with a local experience. Now, the challenge I would like to throw at this podcast is how effective is the on-the-ground, how effective or not is the data version of it, the desktop, and is that changing as a result of technology and shifts? Because if I go back 20 years or longer, things have dramatically shifted as we moved into the digital era. So I've been on that journey from analog, back in the days when we were processing mortgages with fax machines, through to watching REA come online, etc. So there's this massive transition. I just wanted to really focus on that transition to say things are moving online. There are lots and lots of data sets that you can do, you can access online and do a lot of stuff at a desktop level, but you can't do everything. I just wanted to really explore what they are. So I won't go through the whole list straight away, but I'll start with the first one. The first one I thought is local market sentiment. So an example of how it can be determined today is very much a rear view mirror with what I do, which is very much looking at sales volume, listings volume, and then coming up with something called inventory. There's some other stuff that the portals are focused on. For example, they look at search, the number of search inquiries for a given suburb, etc. But I would challenge that and say, I think the ideal understanding of sentiment is to look at how busy and how frantic an open house is.
Yeah.
So that's the one I wanted to launch with. I thought that was probably the most important one, the most interesting one. Count how many thongs there are outside the house during the open house, etc.
I love that you've started with that, Ken, because, every month I do a little market wrap up beyond the bullshit for my clients at Good Deeds, right? And I just send that out, and a lot of our insights are very much that. It's what's actually happening on the ground versus what's being reported. And also, one of the things which you're probably going to get to in your 10 things here, a lot of data is reporting macro. It's reporting the big picture. And so, what's happening in this open house in this suburb, and it could be this part of this suburb or an apartment in this suburb versus a house in this suburb. You know what I mean? At that really micro level, you can see absolute trend busting activity. And if you rely too much on the data and go, well, there's no way I'm going to basically compete for this property because look, prices are falling in Sydney. And it's like, well, okay, then you're not going to buy it. In one particular case, if it's really competitive and it's the sort of property that people fight over. So it is interesting that that's been your number one. So I love that. That's really good.
Well, just when you think about it, right, like sometimes investors, they go, I'm going to focus on the data. I'm just going to buy where I can for the price point. But then
when they flip in terms of buying an owner-occupier, they start to get a little bit more technical and they start thinking, well, no, I don't want to be on that street. I don't want to be in that part of the suburb. I don't want that aspect. I don't want that for privacy. Oh, I don't want to, I'm actually willing to, I don't want to be in that part of the suburb, et cetera, et cetera. And so you've got to remember that most markets are driven by owner-occupiers, right? And so it's hard to say that doesn't matter what the owner-occupier market wanted, the locals wanted. And I think when people watch where they got their home, they know that suburb, all the surrounding suburbs, particularly if they've got any interest in property, really well. Like I look at every single listing that comes on, in the suburb, right? And I can see how long it sits there. And I assume I'm driving around the suburb. I'm like, oh, that's on the market. Okay, right. That's interesting to watch. And the stuff that's good, the stuff that's bad. And you can see just by living in a suburb over time, if you track prices, you start to know how sentiment's shifting, right? Because that's actually going quite fast. And that's a good price for that property because you go, well, in the last 6 months, that would have sold for 2.2 and now it's 2.4. So that you've got that local knowledge. And I just think that, I find it really hard when investors just, blindly go, well, I'm just going to focus on the data and not factor in that local sentiment. But when they look at their home and their biggest asset, they think that matters a lot, right? And they can see it. So do you think that really correlates there? How investors maybe just forget that, owner-occupiers drive markets?
Well, I think there's a Kool-Aid that I drink and others do as well. When you get into the desktop research side of things, you become highly dependent on the data and a little bit overconfident that the data gives you all you need. So that's kind of the theme of today, is to really challenge it, because the more you look at the same data set and the more you think you've got a great handle on it, I really think you are drinking your own Kool-Aid there. And you say, look, there's going to be a gap with what you can do at the desktop. You need to always call that out. And I need to pinch myself and say, hang on a minute, you don't know whether that house that's sold is a fair price. So that's the other thing too, is we take a sale price and then aggregate that and create the analysis. But one thing that's always an important call out did someone pay too much for that house or too little? Now you can always argue, the valuers argue that, well, yeah, there's a backstory. And I know that people say, whatever it sells for is the price. I get that. As long as it's arm's length. Okay, I get that. But there's nuances in that, because we want to know, hang on a minute, was it a dodgy renovation that somebody with FOMO has come in and paid top dollar for and not really understood what they bought as a property that still needs another $200K spent on it? So that's the stuff in the call out of the number one. The next one I've got on the list.
Before we go to that,
Neighbourhood trends.
I know, but before we go to number two, I will add a point there in favour of data, right? Because if you base a decision based on some of those outliers, then you are going to make huge assumptions based on outliers, as opposed to that's when data is aggregated and smoothed out, the impact of those outliers is sort of taken away and you're not likely to use them in your decision-making. So there you go. There's something from the local specialist, might take off that bias hat and I put my data bias hat on.
Yeah, one swallow doesn't make a summer, as the saying goes, which I quite love. That was from my How to Lie with Statistics book. Next one's neighbourhood trends. So I've got a little checklist here, but when we look at neighbourhoods from a data perspective, what can we see? What can't we see? We can see census data down to the SA1, but that's about where we draw the line. You might be a little bit sophisticated and come up with some analysis of what cafes are opening and all that stuff, right? There are some things you can glean, but you don't get a feel. You never really get a feel for a neighbourhood sitting at the desktop and using spreadsheets. So my second one was, neighbourhood trends. We need to identify things before the next census as well. So not only does the census just go down to the SA1, but it's 5 years old and it doesn't measure everything. And it's very hard to measure sentiment. So that's number two.
I'll add to that, yesterday, Megan, every Wednesday for Homebuyer Academy, Megan and I do a little live Q&A, or we call it campfire, for our students. So they can come, people who've done our first home buyer guide course, they can, or doing it, they can come along with their links and the properties that they're thinking about buying, and we look at them and comment on them, and they can even bring their price research, and we do all this sort of really active commentary, and it's great. And so this guy brought along a house that they're looking at in Reservoir in Melbourne, and so he said, oh, the street that we're looking on isn't as pretty as the next street. The next street's got, tree-lined streets, is tree-lined and, pretty houses and all the rest of it. So we did a street view going down the street, using Google Street View. And I'm like, okay, so, what we're looking for is signs of improvement, people spending money on renovations. You can be fairly confident in areas gentrifying when that's happening, blah, blah, blah. And I was making comments in what I was seeing. He says, oh, this is really old. This was done years ago. He said, now that house has been renovated that way. You know what I mean? And it was like, oh, this is gold. It's a really classic example of people who think they can buy everything at desktop. And there he is updating us because he's been there.
Well, yeah, and I mean, it lags on this court seems here, but it's also the reference points, right? So, if you're looking at neighbourhood trends, like you go, well, I've been here for 4 or 5 years. I know this local market. There's definitely new cafes and restaurants, but there's this part here, they're just constantly trying to lease it out. There's commercial space available and no one really goes to that cafe. Everyone really wants to go to this place. And, and everyone's, and also like the people within the suburbs, like, when you're talking, you're in the community, you're like, oh, that person's also moved here from that region. And why are they buying here is because they couldn't buy, and so that demographic shift, unless you've got those reference points where you've lived in an area for some time, you don't notice it because you're just there. And you just think, well, this is what it's always like. Yeah. Well, no, actually, more families are moving here or more downsizers or, it's from this area. And so it's really hard to get that going. Even just going to an area for a day, you just haven't got that reference point. And I think that's how you can't really compete with that local market knowledge over many years because you need that, history there.
Mm.
Mm. It's interesting. I have an anecdotal story where I was analysing how the performance of valuers and their valuations against property prices, because one of the banks, I won't name anyone, one of the banks, their brokers were complaining that the values were undervaluing.
Yeah.
And what I uncovered was that one particular valuer was significantly below market value in a given suburb. Why? He grew up in the suburb and didn't let go of his bias.
Wow.
That's true. Yeah, that's absolutely.
Yeah.
Interesting.
That was interesting. I digress slightly.
That can't possibly be worth that. That's an example where local knowledge is actually bad.
Well, yeah. So that was the next one. The third one I've got is community events, and how these events can create culture and can improve the spirit and the community vibe. That was the third bit. To me, I'd also look at it from a cost of living crisis perspective too. Is a lot of places in and around markets where people are spending excessively high rents relative to their income or high mortgages, and the cost of living crisis is hitting them very hard. That's having a knock-on effect to local markets, for example. So, local stores, local retailers doing it tough. Whereas a lot of the areas that aren't suffering that cost of living crisis, these community events are still in operation, still profitable.
I'd even put it in a more micro sense. There are streets that have the annual street party.
Oh, yeah.
There are streets that have lane parties, and so there are communities that people buy into. Sometimes there's streets that people will not sell out of because they couldn't take themselves out of that community. And there are others where, people buy into it and then they're suddenly, oh my God, like I've had clients that we didn't actually know that have these Christmas, because there's no publication of who has a Christmas street party. And I've had a number of clients over the years said, how wonderful it is at Christmas. There's this real sense of community. Everyone then starts to know each other. And so that is something that only a very local specialist will know.
Yeah, we used to do it all the time on this street. It was wonderful.
What happened?
Until two of the neighbours who no longer live here wanted to have a punch shop.
Fisticuffs.
Alcohol, right? So But yeah, that went on for years. It was wonderful. It was community building.
Yeah.
Anyway, alcohol. Too much alcohol. There you go. So next on my list was school reputation changes, because most of the measures we've got for schools are the school capture area and NAPLAN. Seem to be the two main things. Yeah, is it a sought after school? That's generally a reputational piece. Is the NAPLAN score good? That's great. But what can't I tell from that? What can't I extract from that? There's lags. There's other things. NAPLAN may not show me, is there a bullying culture in the school, etc. So that was the next on the list.
I tell you, I've got examples on that too. There's so many of these, like the little school that my daughter used to go to, little tiny, it's like a country school in the city. And it had this fantastic reputation because of this principal. And she happened to leave the end of the year before Molly started there, And then it started this sort of revolving door of principals, and it didn't have the same reputation. And, lots of kids started leaving earlier to go to private schools rather than staying, right the way through to year 6. In fact, the year ahead of Molly in year 6, there was only 3 kids left in year 6. So you go from this sort of really great, caring, this wonderful reputation this school had to quite a dramatic change. And it changed rapidly within the whole time Molly was there as well. So it's just very interesting that is exactly what happens. And again, the reputation could have carried on from before for anyone that's not actually on the ground.
Yeah, the data might just show you that there's a high school there, there's a primary school there, but like you say, principal, and if the owner-occupier market, the family market, is one of the strongest markets driving prices, right? How often they sell. If they decide to stay there all the way through the, primary to the high school, well, they're not going to be a seller for 10, 15 years. But if a lot of people are, say, selling out when the kids get to year 5, year 7, and they don't want to go to the local high school, they want to be in a completely different area, then your turnover rate or your listing rate's going to increase, right? And ultimately, that's one of the things that slows down price growth and things like that. So absolutely, from an investor, knowing how the school is not just faring on the results, but how is it liked in the community? Are people wanting to go to high schools there? And all these sort of things. I just don't think you can get that rocking up at a suburb, unless you really meet, and one parent's going to be different to another parent, because their kid's experience is really good, and another one's not, and so it takes years to get multiple opinions. When we're going through this up on the beaches now, like the local public school, different opinions from different people, the local, Catholic school, different, and people, and how that, if people want to stay, the high schools are a particular issue, like, are people willing to send their kids to the local public schools for high school or not? Or do they really want to go to a Catholic or a private school, etc.? So, I think that's a big one, Ken, particularly if you're trying to get into the housing market for the higher income families. Schools matter so much.
Next on the list was local business openings and closures. So, we get excited we got excited up here. The IGA, totally renovated, beautiful, stunning, high-end style deli, and it had a massive impact on the street, on the high street. So it became a bit of a community thing. This high quality, and then a cafe opens up, but then you've got a whole series of restaurants that just can't stay open. So it's an interesting thing, but. I would argue that our local main high street would be very different today if it were not for that IGA and the massive investment they made.
And so that can have a knock-on effect for the desirability of a suburb, of course. So do you have any data that sort of backs that up?
Well, look, for me, to answer the question about the data, one thing you can do is you can look at sentiment in listings and look at what's mentioned regularly. So from a data nerd perspective, trying to solve these problems, which is how I like to come in.
You're using AI for this?
You look at there is. There is. All what you do is you get AI to create what they call regular expressions, which is just, hey, look at this blob of text and look for the most common facilities or local features or amenities that are being mentioned. Now, there's a company out of Israel that created a technology where you could do this at scale over millions and millions of rows within seconds. Phenomenal. So you could do a sentiment analysis of a big blob of text, and I pull out of that and say, well, these are the things that the local real estate agents like to talk about the most. So there is a technology out there that can do this.
Mm. But also,
so that was that one.
Assuming that what they like to talk about is actually what matters to buyers. You know, we do quite a bit of vendor advisory work. And just this week, you know, Rachel was pulling out this ad copy, or was it last week? Pulling out this ad copy for a property. It's like, do these things really matter in this suburb? And it's a suburb that we know quite well. And it was like, I don't think so. Let's just get rid of the shit and put stuff in there that really matters. So that could be that could be the real estate agent's bias about what matters in that area.
True. True. Now, number 6, traffic pattern changes. So, yes, what I'm trying to do is find the data strategy that can solve it, and then pull that apart. So, for example, Google traffic, you can identify, flows of traffic, and a number of these technologies are now available. Most cars are online. You can track it. But probably not enough to truly identify, is this a little rat run that occurs at school time at 3:30, etc. So, that was probably the other one. And equally, just as a slight extension of that, sometimes when you do an analysis of a street, it's rather important to know there could be an end of that street that is a heavy traffic, lower price, near the rail, blah, blah, blah. And then there's an entirely different end of that street that it probably should be called a different street, and maybe even a different suburb, because it's that different in terms of price and quality of living.
Yeah, and that's interesting actually, because definitely on the rat runs, there's rat runs I know that are problematic. People don't want to buy on those rat runs, and there's others, same amount of traffic, it's all local, that people are quite happy to buy on, and that's sort of weird. Like, I couldn't even tell you why. And particularly, like, let's the Balmain example, I use it all the time. I lived in Balmain for many years. My office has been in Balmain for the entire time. I've had a business 15 years. I've worked in Balmain in real estate for 24 years now. I know the rat runs, and I know which ones are not seen as an issue with buyers, which ones are. Honestly, couldn't tell you why. I don't know, but I know which ones we will look at to buy on and which ones we won't look at to buy on. And that's something that I don't know how you pick that up in data ever, because I can't even explain it. And I'm the one with 24 years experience.
Yeah.
But interesting too about you talking about those roads where you got the quiet end. You quite often see that. I feel sorry for someone who's trying to sell a property on a road that everyone knows it's a busy road, but there's a quiet end of that road. And you usually see in the advertising the quiet end of the busy road name. And we bought some of those properties on quiet ends. They're quite legitimate, good properties at times, but it is a slight disadvantage that you do have to overcome. And again, it's
we've got one suburb here, one street here that's just so crazy busy, and it runs right next to the rail. And then there's the other end of it, which is one of the most prestige streets in the suburb. It's amazing.
Yeah, it's just where the rat run starts and finishes, right? And, and I think up where we are, there's certain streets that I absolutely didn't know the extent of the rat run. Even when I was living in these areas, up here for a couple of years, because I moved to a different part in the suburb, I went through the suburb a different way, and I was like, oh, wow, I actually didn't know that this is what everyone did. Yeah. And so, that's years of living within a suburb and tracking your suburb and just not being aware that, because I thought I used to go a different way because I lived at that area. So, and I wasn't traveling at that time of day. And I don't know, looking at Google traffic and things like that, it'd be interesting to see ways of, as that technology gets better, I think you'd absolutely should be able to go through a day, go through 7 days a week, go through, school time and not school time and start to see where number of cars are. But it's kind of like the speed of those cars. It might not look that busy. Oh, it's only one car. But if they're going down, 60 k's an hour, and as a family, and buses go down there and they go down fast and it's tight and it's a narrow street. Do I really want to have a house on that street and my kids walking out on the street? Well, no. That local knowledge of going, well, I even know it's a semi-busy rat run. It's not worth I wouldn't want to be on that street just because of the speed they go. And so I think that knowledge takes years to build up within a suburb is where's traffic building up and where's the issues and where do you not want to live.
It's funny, we had some clients that were looking at it. They were moving, originally they lived in Melbourne, then they lived overseas and they were moving to Sydney and didn't know it at all. And there was this beautiful big terrace that was in a little pocket of Petersham, and it was 6 meters wide. It was really quite unique, and they were like, "Oh, this is really, really lovely." And we went and had a look at it. And I said, yes, it is. It's unique. It's lovely, a big block of land, and around the corner, a little Portugal, and you get lots of custard tarts and chicken and whatever. And you can walk to the station. It's not too far, etc., etc. So the problem is that in morning and afternoon sort of peak hour and school runs, and all day on Saturday, it's gridlock in it's in this little cube, and it's gridlock all around it. There's no way to get in there or out of there without actually encountering traffic and significant traffic on single lane roads. And I know that because I'm a local. Whereas, and I drive around here all the time, even someone who lived in the next suburb probably wouldn't even know that, and so I just said, I can't help you. I can't encourage you to buy it. And if you are always going to work from home and never leave on a Saturday or never leave in the morning or the afternoon, then knock yourself out. But, you need to go and check this out. And it was a no-brainer. Once they sort of encountered it, they were like, oh, that is a nightmare, somebody...
It reminded me of an analysis I did when we were looking at when the best time to sell a property on a main road.
Oh, yeah.
And it's Captain Obvious. It's when the market's hot, right? Because the gap varies, right? So, sell it at peak FOMO and the gap between the suburb median and the street, the busy street price is the narrowest.
Do you know, on that, when I first became a buyer's agent, this is what makes me laugh when I sort of hear the theories of new buyer's agents, because I had plenty of my own way back when. And one of them was, I'm going to encourage people to buy on main roads in slow markets and then sell in hot markets, because I could see that expansion in terms of the gap between the median and those prices. I could see that playing out. And I've tracked a lot of those properties. So I've actually done the research to demonstrate that it does actually happen. But I'm not actually into property trading. I realise the folly of property trading, but from a technical point of view, yes, you could do it.
It's so hard because to actually make the most money there, to actually make the risk worth the benefit, right? You've got to buy at the bottom of a market, and that's usually not when it is the bottom of the market, right? You never get that lucky.
You don't know it until 6 months later.
Yeah, exactly. And so, you think you get this bargain at $1 million when it would have sold for 1.2 because it's a really slow market, but then it goes down to 900, right? And maybe you could have bought the better property at $1,050,000, right? Because the market went down a bit further. So you don't usually catch the bottom. And then getting out at the top, it's like in trading shares, you end up selling too early usually or you leave it too late. You get a bit greedy and you think, oh, market's going nuts. There's FOMO, bang, negative sentiment shifts in weeks. And all of a sudden that price benefit that you got, that FOMO, you were just too late because, particularly when it's your home, that's really hard because you've got to live in,
buy something else,
find another property, etc. And for an investor, it's hard because you've got a tenant in there as well. And how do you kick your tenant out to sell it at the perfect time months in advance? It's just almost impossible. And
100% agree.
Strategies fraught with danger. Unless you're getting yourself an absolute steal and it was a real dire market and the good stuff was holding its value, and maybe you could play it that way if it was a short-term bet, but it's just too risky for my point of view.
It's naive.
Quite a great asset.
It's naive, and I will put my hand up, say I was naive before I learnt better. Number 7, Kent.
Yeah, property condition. Now, this one's interesting in that, there are a number of people that buy purely based on third-party reviews or inspections.
Yeah.
I've heard of a number of stories where people outsource it to a potential property manager, and then the property manager's doing that inspection with a view to if it does become an acquisition, they will get the property for management, and they're doing that service for free. So that's the story that I'm getting is fairly common. No doubt you've probably heard of the same one.
Yeah.
There is a fallback in that you can always and probably should use a building and pest inspection and get them to do that anyway. But that can get rather expensive when you're in that process of looking at 10 or 20 houses. So ultimately, my conclusion on this item on the list was nothing really beats having a bit of an understanding of what to look for and doing it on the ground.
Oh, 100%. And there's things that you can't determine by looking online even. And even if you had, say, an agent or a property manager go and do a FaceTime with you or record a video and, you know, you could specify once you look up and down and underneath and all the rest of it. You can't pick up things like the smell of damp. You know, that's something you can't pick up. It's quite difficult to pick up ceiling heights. I mean, you sort of to some degree you can, but it's actually quite difficult. You know, there's a whole number of things that you really, the smell in particular is a huge one that can really catch people out because damp, you know, could be everywhere. And often property managers, you know, they're doing ingoing and outgoing inspections and all the rest, but they're looking for different things. They're just looking to, you know, to note the property condition and then compare it, you know, to what it was when the tenant moved in. They're not really looking at, well, you know, is there maintenance here? Is it a good, should I buy it? You know, they're really not looking at it with that lens. So I totally agree. Data will not give you that information. I know there's...
I mean, parts of the suburb have just got big damp issues, right? Like, and I keep referencing to where I am, but yeah, there's certain streets that have, I mean, the data would probably show that they're south-facing and the aspect and all that sort of stuff, but you wouldn't know how bad some of those problems are in winter, right? And how bad the damp issues are, unless you were a local expert. And even you wouldn't know that, to be honest, unless you know someone who's lived in those properties and heard the stories from them about how bad it is. And, you know, when you live in the area for a few years, you go, actually, that's got a real problem in there, whether it's a damp or smell or water problems or, you know.
Overland flow is a good one because you're in a hilly area, aren't you? You know, it's like I was walking through Avoca at Central Coast a couple of weeks back when it was raining a lot, right? And we drove up this street first and I was like, all these driveways on the high side of the road, because you think, buy on the high side of the road, right? And all these driveways were like rivers. And I'm like, and it's not even raining. It stopped raining. It hadn't rained like since the day before. And there's still like just full on runoff. And I'm thinking, what a nightmare. You definitely want to sell them in summer, wouldn't you? Like, we're not.
Oh, it's not a rainy day.
Best time to sell in a swamp.
You'd be like, I want to sell an El Nino, you know, because like you'd be thinking, I don't want to run the risk of a big rain event coming because that's not a flood zone. I don't think that comes up in a zoning report. Do you know what I mean? Like these are the things, and you think, oh my God, imagine you buy the house, it's all dry, it's all nice, and the first rain, you can't even walk up your own driveway because it's running water. And you just think, oh, that's something that a local should know, a local specialist.
Yeah, I actually think
there's some good...
two friends in the beaches right now that, you know, both what it's just bought, so they're doing a rental in the middle, and huge damp issues, right? But an investor bought that. Well, so it was a downsizer buying that from a different state. And then the other one a friend's renting is huge issues there with that building, structural and damp issues. And an investor bought that interstate with the idea of moving up here as well. Like it's they're both sort of similar things where they probably just bought them online. They didn't have that local market knowledge. They just sort of rushed their decision. They're renting it out, and then in that rental period, we've seen all these issues that they wouldn't have bought the properties. Well, I don't think they would have anyway, because these are quite significant issues that they're going to be surprised on. So, I mean, that's maybe not the local knowledge, but it kind of is because of where they're located in the suburb and the type of properties they are, which they haven't grown up in the suburbs, so they probably won't know those issues that the locals do.
Yeah.
And there are geohazard products out there, but what I wanted to challenge is that a lot of them are models, and so models are always prone to error, and you get a lot of false positives. So one of the byproducts of a lot of these geohazard type risk models may well be that it says a property is bad when it's good, and a property is good when it's bad.
I'd rather, if it's error that you buy it says it's good and it's actually bad, that's the problem. I'd rather run away from a good property that says it's bad than the other way around. I heard this story about an investor that a couple of decades ago bought all these cash flow positive properties in an industrial regional town. And there's a lead smelter in this town. And they bought a handful of properties and rented them all out. Great cash flow, like 10% yields and whatever. And as time went on, they discovered, which they didn't know when they bought these properties, that 2 of them were in a zone that was too close to the smelter for children to be able to live there. So there's no schools there. Apparently kids can't even walk in this area because of the lead contamination in the soil and also in the air. And so when they realised that, they couldn't rent those properties out to families, so they rented them out to sort of adults only and mostly share houses. And that sort of meant that there was more turnover in terms of tenancies. There was also more wear and tear on the property and more maintenance issues. So the cost, these particular properties cost more. And after a number of years, they decided to sell them. And so they put it to the market, and as buyer's agents are increasingly doing, they had a number of buyer's agents from other states looking at these properties, none of whom inspected the property. And I think there were 3 offers. There was a local buyer who was aware of the issues, offered a certain amount of money. I won't tell the exact figures. One of the buyer's agents offered 25 grand more than that, and the other one offered 45 grand more than that. The one with the 45, they didn't go ahead with that offer because there were terms that weren't that favourable. So the offer at $25,000 more than, and we're not talking a lot of money here. We're talking sub 300,000, right? So the one that had the offer of $25,000 more than the local buyer who was aware of that client of that buyer's agent has paid the buyer's agent to pay 25 grand more than a local who's aware of these issues, and they're probably none the wiser. So I think that they probably did their decision based on the numbers, or put inverted commas around that, which would have been rent, oh, look, you get really good rent, probably completely unaware of that zoning or of any of that stuff. So you got to wonder, don't you? So
and there's a quote from the castle in that too. What do you know about lead?
What is that quote from the castle? So, that's data-based buying.
Yes. There we go. Next on the list was neighbourhood aesthetics. Now, there's the data challenge here is that you can get stuff from Google Street View. You can get satellite images. You could look up a council website and look at when they're what they've approved. They're redoing a garden or whatever. New street facade at the shops. There's a whole range of things you can get from the local council very effectively. The question is, what can't you get? And there's often that little nature strip that never gets mowed. You've got all these scenarios. So. That was that one. I think there's a little bit more challenge because you can learn these just by a quick drive around. The question is, if you don't do the quick drive around, you don't get to know.
Yeah, it's very true. In your notes here, you mentioned that the beloved Commodore up on bricks.
I love the Commodore on bricks.
Deserves its own acronym. What's the acronym?
It does deserve an acronym. The Commodore on bricks. So. This goes back to a very large number of claims we paid in one particular street in Sawtell, south of Coffs Harbour.
Right, yeah.
And we used to just call them green. I don't know why we called it green streets, but it was the old, really, really small blocks, 350 square metre blocks or smaller. And whenever there were a number of claims in a row, there was a couple of guarantees we always had back then. Number one, they all had satellite dishes because they were living beyond their means, paying for Foxtel or Opstar, right? So they were paying for Foxtel when they should have been paying for the mortgage, whatever. We're being judgmental here, right? And then the second one was the Commodore on bricks, which was, the other giveaway. So as soon as you had the tick, those two things ticked, you knew you had a big LMI claim.
All right, on that, let's move on to number 9.
Local policies, new local government policies or zoning changes. Now, I'm going to argue that the bulk of this can be done through data. What can't be determined is the rumour mill. And sometimes the rumours actually surface well and truly before it goes through a council meeting minutes.
As you mean the rumours of what might ultimately be changed?
Rumours of a change to the zoning seem to sweep through up here very quickly. And so, yes, well, do you jump at the shadows of a rumour? Probably not, but it's interesting because there are often the case the rumours are true.
Yeah, can be. Interesting. All right, number 10.
Which just thinking about that, like there's, planned zoning changes, but you're right, there's pushback on those. How likely are those to get pushed back on, and where parts of a suburb that are likely to get away with heritage overlays or with environmental? So, where are the suburb, unless you know that suburb, you're not going to know like where this pushback's probably going to be successful, where's not, what part of the suburb's going to stay scarce, where's likely to, get much more high density and much more relaxed. Like I do think it takes years of that understanding a suburb to know and to be protected, because zoning changes are always a risk, right? Like, but what you want is that zoning change to either benefit you and not be, a huge negative for you, right? I think a lot of people up on like the North Shore, for example, with all these state government changes, like, yeah, it benefits you if they're going to make it high density and you've got a block that a developer would want to convert to high density, but it doesn't benefit you if you're...
Well, if you don't want, if you're happy to move out and you haven't just renovated your home.
Oh, that's right, exactly. Yeah, you haven't bought a renovated home that's not as worth as much, but that zoning change, might not happen, 200 or 300 meters away. You might go, well, actually, that's very unlikely there because it's very hilly, and so that even if there is a zoning change, developers aren't going to come in and do that. So I don't know. I do think it takes a while to figure out that within a suburb, what's likely to be better from a development point of view and a zoning change. I mean, maybe you could do that on Google Street View and maps, but are you really going to do that versus what a local knows? Yeah, probably not.
Well, here's the thing too, right? So the state government in New South Wales has, been very busy rezoning those corridors along train lines around train stations. And so you just spoke of one there, Chris, up the upper North Shore. There's, Roseville, Linfield, and places like that. Now, these are leafy, it's called the leafy North Shore, right? And so there's lots and lots of, big blocks, lovely big family homes with pools on big blocks of lands, very manicured gardens, all very nice up there, right? And so then you've got these zones within, however many square, 400 metre radius, is it? From the station that have been now zoned high, medium or high density. And so you've got these neighbours banding up in some places and going to some of the bigger agencies to try to find developers to buy them expressions of interest, et cetera, et cetera. Now, I haven't checked. I'm not sure how many have actually transacted, because also the opposition to the state government has come out saying that if they get into power in the next election, they're going to rescind all of that. So you can rezone it, and then you go, well, who's going to pay, $10 million a house lot or whatever, for the promise of potential of redeveloping? You have to be pretty quick to get in there and turn it over. If you're going to actually, to make your money out of that, because if we have a change of government, that will change. And the other thing about that rezoning thing, which I thought was interesting, as I saw in the paper this week, that the Chris Minns and the Labor government, so they're the ones who've been out there rezoning these areas. Now they're talking about Well, all this rezoning's happened, however, hasn't translated into commencements. We've still got we're coming up short in terms of how many more dwellings have started being built, and we're not actually going to make our targets. Amazing, because just because you zone it doesn't necessarily mean it actually gets built. And so now they're talking about the state government having to buy this stuff off the plan so that the developers can get the finance and the incentive to actually start building this stuff. So again, on the local ground, I look at what's been proposed for, is it 1,200 metre radius, was a 600 metre, I've lost, but anyway, a big radius around the new metro station in Rozelle, and that's going to impact Balmain. You go, well, in reality, there's going to be some streets that would be the lowest hanging fruit. There's some streets with industrial property on it. There's some certain streets along main roads, for argument's sake, where the values are less expensive. But the minute you go looking at a tiny little house on a handkerchief of land, which is on the open market is worth about 2.5 million, 3 million, and then you've got to buy up enough of those to actually make a development that's worthwhile. You've got to be practical about this, and it's unlikely going to go ahead. But again, that is all about understanding locally what's likely to go down that path versus what isn't. So if you look at a map, you could be going, right, all these are fresh pickings for investors, but you really need to get in there on the ground and work out what's already there, what's likely to happen.
Oh,
Rare.
number 10.
No, they're into
Last one.
Okay.
Insider transactions.
Mm-hmm.
I thought you'd like that one. So I'll finish on that one.
Yep. Very true.
You paid too much.
Well, yeah, and we do know the backstories in our neck of the woods as to why so-and-so bought that house and paid through the nose for it, and if you rely on that when you're looking at values and think, oh my God, that means this house I'm looking at now further down the street is also worth the same money or worth a little bit less, but close to it, without knowing that backstory, and you're not local and you come from elsewhere, agents love that type of buyer, the uneducated buyer. It definitely happens.
I guess thinking back in 22, 21, there was a property sold up near me, and it was way out of market. And even at that point, there was a hot market, but this property was just way, way, way out. And it still would be nowhere near what that property sold for. Every time I drive past, I think, oh, I feel sorry for you. You just, and so and there's other properties as well that I can think of, and I think as a local, that, and you go, look, you've got yourself a pretty good deal for what you bought, but then this person is definitely overpaid. It's way above what anyone should be paying on that street. And, I think that's the sort of, when you are a new buyer into a suburb, you don't know. And to be honest, if you entered the property, that was probably a top of the market. But if you entered the suburb not long after that, the market kept kicking, and you base it and said, we just would know that person was really just a gung-ho. I mean, maybe it was a crazy auction, and you went to that auction and you knew that, and you then reduced the price as a buyer. But buying on data, you would go, well, that was a rational purchase. Well, no, it wasn't a rational purchase. And so I think you're right. Not just the local deals of, someone just making a quick deal because they've bought something else. And so that was a pretty good price to pay for that property. But those local hot properties that sell, if you see, and they can, in hot markets, you can easily see 3 properties sell well over because the market's moving, and you just haven't factored that into your decision.
When we do our price,
they're not.
We obviously look into recent sales, and nothing. It's so unusual when you get an exact comparable. You go, right, that one sold for that, therefore this one's going to sell for that too. You've got to make assessments. This one's a little bit better, a little bit worse, a lot better, a lot worse, and whatever. And so, and we sort of stack them in a spreadsheet, and we index the prices according to price movements, etc. And usually there's this nice pattern. The properties that are inferior are less than what we think this property's going to sell for, and better than, etc. And it all fits a nice pattern. But every now and then you get this outlier. You get a superior property that sold cheap. You think, wow, that sticks out. It really is obviously an anomaly. Or an inferior property that sold for a crazy price and it sticks out. It's like it doesn't fit the pattern. We have to include it and then put a little note there that this way. And then we want to find out why. And some of the stories we find are really quite illuminating, right? And sometimes we know them, but other times we can call the agent. The agent will normally tell us. But there was one property that I honestly wish I was at this auction. I've spoken to a number of people that were at this auction, but I wasn't there. Unfortunately, it would have been absolute gold to have been there. And it was in Birchgrove. It was a waterfront property. It was some years back. So the people bidding on this, you assume, are quite educated, smart, successful people, because it sold for $6.5 million or somewhere in that vicinity a number of years back, right? Quite a few years back, obviously. And so here you are with people fighting at auction for a property, and after the million, bidders often sort of jump to bidding in 100,000s, 100, 200, 50, whatever. They forget the million, right? So the bids, say it's at 6.5 million, it slows down. The highest bidders holding the highest bid. They're sitting at around about $6.5 million. They're wondering, they're waiting, expecting it to be knocked down. Then the auctioneer just verifies the price. The bids are here at $6.5 million. The highest bidder says, oh, no, 5.5. Auctioneer says, no, so it's 6.5. The highest bidder has bid $1 million more than they thought. $1 million more. Now, the underbidder is thinking, I was prepared to pay effectively nearly $1 million more than that dude who's about to buy this property. I've been pushed up $900,000 or something by somebody who actually can't pay it. The auctioneers quickly recognised what's happened and sold it. Right? There you go. What are you paying? Sold. Now, under auction conditions, thankfully that person could find the extra $1 million from somewhere. But under auction conditions, that person has bid $6.5 million, even though they thought they were bidding $5.5 million. Isn't that fascinating? I know. But also for the underbidders, what a bullet dodged. Like in reality, if the underbidder had actually been the highest bidder, they would have been pushed up close to $1 million by somebody who didn't have the money, who didn't know they were actually pushing them up.
These outliers and also influential observations. So the outliers are pretty straightforward. One, just looking at one dimension of data like price, pretty easy to see the dot that sits out there, right? Yeah. It's but when you come in from a different statistical perspective, there's something called an influential observation. It's the one that might be right smack bang on the median price, but it shouldn't be there.
Oh, right.
It just shouldn't. It doesn't deserve to be there, right? It's weirdo. And the example might well be a 1-bedroom property with no bathroom, selling for $4 million, whatever. So if $4 million is the median for the suburb, you don't want that there. It makes no sense, and they ruin your automated valuation models. Totally ruin it. So you got to get rid of those. But the more of them that exist, the harder it is to find, because they move as a pack and they're harder to detect. So there you go. That was my little nerd rant.
Okay, so that's great. So you pulled out those 10 points, and thanks for doing that. That really reflects something that somebody with local experience will know that someone coming at it from a data perspective will never know. That's basically what you've done. And how do you feel about using, at what point should someone sort of use data to determine a location and then say, great, thanks very much, data, I'm leaving you now, I'm off on my... So it's about like getting the train to your destination and going, right, well, the train's not going to take me to the actual property. Now I need to get on a bike or a moped.
Well, I think that I see a couple of key things. I deal with a number of the local buyers agents, as you're aware. I see an opportunity for them to embark on a data discovery, learn more about data perspective. And equally, those in my position need to embrace the on-the-ground, understand what you don't know, what you don't know.
Yeah.
So I think both camps need to do a little bit of learning, and observe what they don't know. But probably the biggest standout for me is the locals who know all this stuff, but still have a big gap on their data knowledge. That's the standout for me.
Yep. I'll go with that. And I know, Kent, you're working with my mentees, if you like, in the Buyer's Agent Mentoring Program to help train and upskill them in this area, and that's fantastic. And I personally thank you, because my understanding and knowledge around data, property data, has, it's changed exponentially. It's grown exponentially since, we've had you regularly on the podcast too. So I'm hoping our listeners have had the added that same benefit. Thanks for coming along.
I think you're interesting one here where the local buyers agents and the new buyers agents in particular who are going down this data route. I do think that it is a bit of a natural evolution for them. That they are getting, they've been doing it for a few years and they're starting to see the mistakes they've made and the mistakes they've made for their clients. I'm just talking about one in particular I know that I've just chatted to recently. And they're becoming more aware that, there is these elements to it, because they were sold the dream that, you can buy on data. And I think they're realising now, because the client outcomes are coming out the other side, and they're comparing what they bought to what they could have bought and what they paid, and they're starting to realise maybe they actually didn't know what they didn't know. And they're also now realising that some of their clients' outcomes are, actually, I want to buy a house now. I've gone and bought 3 properties with you. Now I want to upgrade my home. And, was that even the right decision for them? Now when they look at compare what they bought, they could have bought as a home, and then they're coming back and they're getting that feedback. And so I think that's what I've noticed with some of these buyers agents. It's the ones that are a little bit aware. They weren't doing it because they're trying to do the wrong thing. They were literally going in there and they joined an organisation, and maybe they've started their own buyers agency. And then you fast forward a few years later and they're starting to see some of the flaws of that. They're now saying, actually, no, maybe I need to use someone as a local expert. I can't just rely on a property manager. Or maybe I need to start to, open up more of an owner-occupier focus to my business. And, even spoken to more experienced buyers agents, 5-10 years plus. They started in the investor world, and now they're owner-occupier specialists. So, I don't expect all of them to sort of make that bigger picture view, but I do think that some are heading in that direction because they've been in the industry a few years now, and they're realising that maybe there were some gaps in their process.
Well, that's good to know. It's heartening, because you need a level of critical thinking to be able to observe that and review those performances and start to notice what's not happening, and start to open up your mind to thinking, could there have been other outcomes? So I'm heartened to think that there are some having that. I'm saddened to think that they're learning that with other people's money.
That's exactly right. Yeah. The client's the guinea pig there. So the client loses out there. The buyer's agent doesn't lose out because ultimately their fee was a flat fee at the front end, and they're not based on performance. However, they are getting better learnings, and hopefully they apply them with the next clients. But
be the first client.
The one who loses out there. And that's one of the issues when you're trying to select picking a buyer's agent. Do you want to be the guinea pig? While they're getting their stripes and their learnings, and some of the reasons would really focus on experience with buyer's agents. I think it takes years and years of local knowledge and experience to get those learnings. Rather than some other industries, you can get 80-90% of the learnings pretty quick. I think buyer's agency is one that takes a long time to get good at.
Well, what I've started to call a lot of those buyer's agents that are really very transactional and very focused on deal flow and using data to make all their decisions is that really they're property traders. They're not buyer's agents. They're not advising their clients. They're just looking for deals, and they're looking for areas in which they can get deals, and then they're looking for the numbers to justify the deal to the client. And that's property trading. That's horse trading. It's not buyer's agency. And I think that, we need to start calling it out for what it is and stop calling them a buyer's agent, So I think that anybody looking to use a buyer's agent has to start thinking, am I talking to someone who's actually going to advise me and has got that longevity, that local experience and able to give me good advice and be a trusted advisor, or are they just going to be a property trader?
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us, and and hear what our amazing guests have to say.